Moving forward, still on the 1 hour chart, and this is the short-term time frames, the hourly chart, and on the short-term time frames like the hourly chart, the shortest expiration dates are being preferred, but again, ruling out the 60 seconds binary options based on the hourly chart, as the time frame is quite big for that kind of a short expiration date. The following binary options can be traded based on the hourly chart. Options with extremely short expiration date, 2 minutes, 5 minutes, up to the hourly chart like presented on the previous recording, up to the hourly expiration date, sorry. Anything above should be treated on other time frames. One-touch options, identifying a range on the 5-minute, on the 1 hour chart, can be used in trading one-touch options, as ranges are being defined by price constantly crossing a specific level. Based on the Ichimoku Kinko Hyo elements, the same strategies used when trading the 5-minute chart can be used here as well. So wait for the Ichimoku elements to indicate trending market conditions. Now, what does the trending market condition? Let me delete this one here. So wait for the Ichimoku Kinko Hyo elements to indicate trending market conditions. Now, trending market conditions indicate the cloud should be green, Chinko above the price and the cloud, Tenkan should be above the Kinjun, and the Kinjun of course above the cloud for bullish market. Or the opposite is true as well for the bearish market. We are looking for the cloud to be red, like it is here, the cloud is red, the Tenkan is below the Kinjun, the Chinko here, the green line, 26 periods back in time, it is below both the price and the cloud. So bearish conditions are, bearish markets basically starts from here, and this is the bearish market in the true sense, like this on the 1 hour chart. Once a bearish market in this case is identified, look for the moment that Chinko is approaching the candles in front of it and engage in buying calls if the market is trading to the upside, or buying puts if the market is trading to the downside. Well, in our case here, this is a bearish market or bearish environment. Bearish market or bearish environment, and because of that we are looking to buy puts. We want price at the expiration to be lower than the striking price, meaning the price that we buy the option for. Then wait for the Chinko to approach the candles in front of it, and we'll engage in buying puts, and the expiration date to be given by the distance Chinko has to travel until actually meeting the candles in front of it. For example, this is the bearish market environment. Chinko, see here, is approaching, the green line is approaching the candles in front of it. By the time approaches the candles in front of it, we have here something like 26 periods. So this is the 26 periods, but we look at the time until actually on the horizontal we meet the price. So 26 6 candles here. So from this moment of time, projecting 26 candles, and here would be the expiration date. So let's say that this here would be the expiration date, and the actual moment of going or buying puts would be this 26 candles in front of this price. So that would be our moment to buy puts. So basically to look for shorting the market based on this approach. So buying puts, let me make this one like this. So buying puts here with the expiration date being here, and there you go, you have the perfect strategy for trading binary options with the 1 hour chart. Now again, as you can see, we'll look at what option to be traded on the 1 hour chart. So options with extremely short expiration date, going from the 2 minutes to 5 minutes up, and it depends very much how the market is doing here, because also if you go back in our project, you'll see that on a bearish environment like it is this one, the Kinjun here has the property of rejecting the price, and so on here again. So even 5 minutes and 1 hour chart are going to be successful with this kind of approach in a strong bearish market environment. The very opposite is true as well. If you go in and you have a bullish market environment, the only difference there would be that you should be engaged in buying calls as you are looking for price to be higher at the expiration date than the striking price. Also look for Chinko to be rejected when testing the top of the cloud in a transitory cycle after a bullish market. So let's say that you have a bullish market here, so look for Chinko to be rejected after touching the top of the cloud here in a transitory cycle. So this is a transitory cycle, Chinko touching the top of the cloud, so the actual price is here, and here you are going to be engaged in buying puts because you are looking for price to be rejected from that top of the market. And the expiration date from this moment on, as you can see, you have almost 45 candles, so 45 hours to for price to expire in the money based on your buying puts identification there. Now with this, we are basically done with the short-term time frames. Moving to the medium-term time frames, and the medium-term time frames involve the 4-hour chart and the daily chart, and from that moment on things become a bit complicated, but not impossible to be traded. So we'll have also one recording showing you what binary options to trade, and another recording showing you how to actually find concrete entry and exit strategies. So stay tuned please for moving forward.